Let's also look ahead to the coming year for markets. China's reopening remains a big story as we close out 2022. This amid growing concern that rising inflation in the world's second biggest economy could impact Fed policy. And that much discussed pivot, here to discuss is Max Wasserman, who is the Miramar Capital co-founder, senior portfolio manager. Great to have you here with us today. You heard our last conversation and what to look out for in 2023. I mean, if there was one big theme that you put on 2023 going into the year, what would it be?
Thank you for having me here. Number one thing I look at is you have to know what you're investing in. We're more bottom up, so we're not trying to time this market. So I would say focus on good companies and good dividends. I mean, we're dividend investors. So I would pay less attention to the market indexes and more at the company level. People forget that the S&P 500 is a market cap weighted index, which has been for the last multiple years more of a NASDAQ 100 portfolio. So it's mainly technology. And your previous guest on the show was making comments about you could just throw a dart. Well, when there's no cost of capital, when interest rates are zero, you basically could throw a dart and a rising tide lifts all ships, if you will. We look at it a little bit differently because the market environment's changed. I mean, the one-year treasury is 4.75%. And now the Fed is raising and worldwide tightening. I mean, the Bank of England, the European Central Bank has all raised interest rates. So we think it's going to be a tougher environment for earnings. It's going to be a tougher environment for technology and these high multiple stocks going forward.
Max, how do you identify value in tech at this point?
Well, again, we focus on dividend-oriented stocks. So we're looking at companies that are paying you growing dividends. We're looking for companies' top-line revenue, strong balance sheets, and market dominance. That being said, technology is not cheap. I mean, you're looking at the average they're great companies, the Microsofts, the Apples, which we have investments in. They're at 20, 21 times earnings, and you can afford to pay that when interest rates are zero. But as interest rates go up, those multiples contract, which is why we last year were telling our clients, underweight the large cap technology. You still can have exposure, but we saw a problem with the NASDAQ given rising interest rates. The multiples were way too high in this new environment.
So let's talk about what you do like then a little bit more, Max. You sent us two picks. One of them is Advanced Auto Parts, which certainly the valuation is not that of a tech stock, but it's also an industry that has been a little bit troubled given some of the turmoil that's gone on in autos. So what do you see for 2023 from that business?
For that business, you're looking at a company that traded at 12 times earnings, paying you over 4% dividend. They ran into a little trouble this year with the fact that their inventory was low, their inflation issue as supplies because they were sourcing out of Taiwan. And the dollar basically had a great appreciation, which is killing them. That being said, the business they're in isn't tremendous. The average age of a car is 12.2 years. Used cars cost anywhere from $800 to $1,000 a year for maintenance. And so we see the aftermarket auto replacement parts a great place to be. Now, it's going to take a while for them to get through the last quarter, which they disappointed. But we think at 12 times earning in a growing environment, if you look at a slowing economy, more people cannot afford new cars with higher interest rates. So they have to keep their cars even longer, and they have to keep them repairs. So we like an Advanced Auto Parts here. We also have an investment in General Parts Corporation, which owns the Napa centers. But with that part of the business, we still think are very strong and will be in a slowing economy.
All right, we'll leave it there. Max Wasserman, Miramar Capital co-founder and senior portfolio manager. We'll talk to you soon.